Big changes are coming to Medicare Advantage in 2026, and not all of them are good. In fact, many plans are quietly scaling back supplemental benefits like dental, transportation, and over-the-counter perks. Insurers are saying costs are rising. These cuts will hit your wallet and your access to care. Today, I'll walk you through what CMS and carriers are doing, how it will affect you, and most importantly, what you can do to protect yourself. Let's get into it. So to understand why benefits are being cut, let's look at what CMS is doing behind the scenes. First, CMS has finalized its 2026 Medicare Advantage Part D rules. And in that rule, CMS increased government payments to Medicare Advantage plans by about 5.06%. Even with higher payments, CMS is restricting how much revenue plans can allocate to supplemental benefits like perks versus core medical coverage, which pushes insurers to reallocate funds. Also, CMS is finalizing rules about mid-year supplemental benefit notifications. Plans must notify enrollees if benefits change mid-year. And the 2026 final rule also requires improved provider-directed data transparency in the Medicare Plan Finder tool so beneficiaries can more easily see which doctors are in network. So the framework is shifting. Carriers now face more scrutiny and tighter guardrails on how perks can be packaged. Another relevant shift. CMS and industry analysts warn about underfunding pressure on Medicare Advantage plans. Repeated years of insufficient funding or tightening reimbursement will strain insurers' ability to maintain generous benefits. Also, fee reductions in other Medicare areas like cuts to home health payments may add cost pressures on insurers that flow into benefit cuts. Now let's look at what insurers are already doing in response to this environment. So here's what carriers are doing, or what reporting suggests they plan to do in 2026. Reduce supplemental benefits regarding dental, OTC, and transportation. According to an Investopedia article, Medicare Advantage plans are already signaling cuts to supplemental benefits such as dental care and non-emergency transportation for 2026. WTOP recently reported that perks like dental and transportation could see cuts in some markets as insurers tighten benefit packages. Limit on special supplemental benefits for the chronically ill. So starting in 2026, the CMS is enforcing stricter restrictions on what kinds of extra benefits may qualify for SSBCI or for chronically ill enrollees. Benefits that are not primarily health-related are disallowed. Examples include non-healthy foods, cosmetic services, life insurance, and so forth. This means some perks offered under SSBCI in prior years may be disallowed in 2026. Benefit reductions not universally publicized. Now, some insurers may quietly reduce maximums, for example, lowering dental annual caps or cutting OTC allowance amounts, rather than eliminate benefits entirely to avoid some sort of backlash. Networks narrowing and prior authorizations tightening. Though not always framed as benefit cuts, insurers are narrowing in-network provider panels and tightening prior authorization rules. Now, these are additional soft ways benefits shrink in practice. The 2026 Medicare Advantage final rule includes language about strengthening appeals and regulation of internal coverage criteria, star rating pressures, and financial incentives. Insurers must maintain strong star ratings. Poor performance can result in financial penalties and/or reduced bonus payments. Humana, for instance, is fighting CMS over disconnected call penalties affecting its star rating. When margins tighten, insurers may cut perks to protect margins without worsening their star performance. Understand that these are not hypothetical. We already see insurance carriers responding to regulatory and financial pressures. Now let's talk about how all of this affects you, your access to care, costs, and day-to-day usage. So let's zoom in on the real-world impact of these cuts. First, access reductions and network impact. So if your plan trims its provider network, the doctors or specialists you see may no longer be in network, meaning higher out-of-pocket expenses or the need to switch providers. Cuts in transportation benefits may mean that you lose help getting to medical appointments, which especially hurts rural or mobility-impaired seniors. Number two, higher true costs and out-of-pocket risks. So even if a plan advertises a $0 premium, you could face higher copays or co-insurance for specialist visits, hospital stays, or imaging. For example, if dental benefit maximums are reduced, for example, from $2,000 down to $1,000, you may get more out-of-pocket costs for dentures, implants, or more extensive dental work. OTC allowances may shrink, for example, $100 to $60 per quarter or less, so you'll spend more of your own money on over-the-counter supplies. Prescription drug out-of-pocket risks. Although Part D has a new cap of $2,100 in 2026, insurers may respond by limiting generous drug tiers or shifting more costs to you. Number 3, value erosion. The extras that made many MA plans appealing are what's being trimmed first. Benefits that once felt free may become minimal or disappear. And for many enrollees, benefit cuts may outweigh small premium savings, and as insurance companies hedge their risk, added frictions such as prior authorizations or stricter criteria may reduce benefit usability even without explicit cuts. So let me explain what I mean with a hypothetical situation. Suppose in 2025, your Medicare Advantage plan gives you $300 a year in over-the-counter benefits, unlimited dental up to $2,000 in transportation. In 2026, that same plan cuts OTC to $100, reduces dental benefits to $1,000, and then drops transportation. That leaves you paying more out of pocket, potentially several hundred more per year. Add a narrower network or more frequent denials, and your real cost could spike even if premiums look stable. Also, remember that Medicare Part B premiums are projected to rise sharply in 2026. Estimates suggest an increase near 11.6%, bringing Part B to $206.50 a month. So a portion of your Social Security or income already goes to that increased cost, reducing your net benefit from savings elsewhere. Given all of that, the question is this: what can you do to respond? Let's go into strategy. So it's important to understand you're not powerless. There are some strategies to help you protect your value in 2026. So first of all, don't auto-renew. Shop carefully during open enrollment. Use Medicare's Plan Finder to compare not just premiums, but co-pays, network, benefit changes, and total expected cost. Look out for plan benefit reductions in your area. Insurance companies sometimes publish 2026 plan documents with benefit changes. Review those closely. Use the tool to check whether your doctors and preferred pharmacies are in network for 2026. Number 2, consider switching to Original Medicare and Medigap and Part D if eligible. With more cuts to perks, the flexibility of Medigap, which is widely accepted by providers, and Original Medicare may offer better value for many. And yeah, you're right, Medigap premiums tend to be higher, but you avoid shrinking Medicare Advantage benefits and surprise denials. Evaluate whether you qualify for a guaranteed issue or Medigap open enrollment window, depending on your state. Number 3, leverage supplemental state and local programs. Many states offer dental, vision, or hearing assistance for low-income senior residents. These can help fill gaps left by Medicare Advantage cuts. Nonprofits, community clinics, and senior centers may offer transportation, vision screening, or hearing aid help. Medicaid wraparound in some states may cover some services Medicare Advantage dropped if you're dual eligible or eligible for Medicare plus Medicaid. Number 4, engage with plan appeals, advocacy, and oversight. So if your plan denies a service or cuts a benefit, use the appeals process. CMS requires stronger appeals in the 2026 Medicare Advantage final rule. Monitor mid-year supplemental benefit mailers that insurers must send when they change a benefit mid-year. Also, work with consumer advocacy groups like Medicare Rights, AARP, local senior legal services to monitor and push back on unfair cuts. Number 5, budget for hidden costs. Anticipate that OTC, dental, or vision allowances may shrink. In your annual budget, plan extra for co-pays, services previously covered, or new out-of-pocket expenses. And if possible, utilize preventative care or less expensive options early. Don't wait until you need costly care and face reduced benefit caps. Number 6, stay abreast of policy and legislative changes. The One Big Beautiful Bill and similar budget legislation may trigger Medicaid or Medicare cuts starting in 2026, which can cascade into Medicare Advantage program pressures. Also, watch for CMS contract year updates and proposed rule changes. CMS issues advance notices and final rule notices every year. Engage with your state and congressional representatives about protecting Medicare benefits. Each of these strategies reduces your risk of being blindsided by benefit cuts or surprise costs. So let's recap. Medicare Advantage plans are scaling back supplemental benefits in 2026, especially in areas like dental, transportation, and OTC supplies, not just rumor, but being signaled by carriers and supported by regulatory shifts. CMS's 2026 final rule both increases payments and tightens guardrails on benefits, pushing carriers to reallocate. Even with a lower or stable premium, your true cost may rise via higher co-pays, narrower networks or benefit limitations. But you've got strategies. Shop diligently, evaluate Medigap options, leverage state and local assistance, appeal bad decisions, budget for extra costs, and stay engaged with policy. A word of caution. This is a pivotal moment. The benefit cuts being phased in are gradual but cumulative. A seemingly small reduction in 2026 could become more severe in 2027 or 2028 if funding pressures persist. If this video gave you clarity, please like, subscribe, and share it with your friends or family who rely on Medicare Advantage. Drop a comment telling me about your state or plan name. I'm tracking where benefits are being slashed the hardest and will report back. Lastly, I'll keep watching CMS, insurers, and legislative moves and update you whenever there's news worth knowing. Don't get caught off guard in 2026. Thanks for watching.